And after last week, where perception really drove the market, we are finally back to a week full of data, which is going to influence the rest of this year, in my opinion. What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you with the week ahead, where I simply just address the top 3 things that we are going to need to watch for that are going to influence interest rates and the markets this week. And please, as always, hit that subscription button so you never miss a beat. I also come to you every day at the end of the day with a very quick 2 minutes with the daily dose, and on Friday with the Friday wrap up. All right, so let's just dive right in. The top 3 things. Number 1, we are going to have CPI on Tuesday. As we can see right here in this chart, we are chock full with some very significant data this week. Number 1, as you can see here on Tuesday, we got CPI coming at us. And in my opinion, as I've said it before, this is the biggest driver for inflation. I know the Fed loves PCE, but I love CPI. And in my opinion, it has more influence from a trader's perspective, which is why I put more influence on it. The big thing, in my opinion, this is going to be a big driver of what happens with interest rates going forward. Should inflation continue to creep up, I believe that you're going to see the Fed pause. At this point, there is absolutely no chance for a July rate cut. All eyes are on September. That has gone from 90% to 61% this morning. That is a significant decrease. And I think if we continue to see inflation on the uptick, and if it makes even a drastic uptick, so instead of being 0.1%, it goes 0.2%, I think you're going to see even a September rate cut get tabled. On the flip side, should inflation come in where it's continuously showing that it's right there at forecast, or if it even takes a dip, it is going to provide good ammunition for the Fed to make a cut come September. You will see increased pressure, which I'm going to talk about here in a little bit as my third influence. And you're going to see a lot of heat on Fed Chairman Powell from the White House, which it's already seeing to reduce that rate. My prediction, I'm still going to stick with that September cut. I think inflation is going to come in right at forecast, if not 1/10 higher. And I think we're going to see the labor market struggle. So that brings me to point number 2. The other thing that we're going to have is, and I'll bring this back again, as we can see on Thursday, we have retail sales. Retail sales are huge because that is what the consumer is spending. As we know, the consumer accounts for 2/3 of GDP. Should you see that number, and traders are already expecting it to come in very light. However, if it miss forecast badly, that is going to be a clear indication that, hey, although the labor market remains stable, and I'll say it again, the labor market is a lagging indicator. Even though it appears to be stable, if the consumer is not spending, that means the economy is sluggish. That means that we are going to see low GDP and so on and so forth. And the labor market might be okay, but again, it's a lagging indicator. So in my opinion, should you start to consistently see a slowing economy based on retail sales, the consumer continues to pull back, and we've seen those numbers, right? The consumer is not feeling good about where things are right now with tariffs, geopolitical, where they are with their bank account, no direction. I mean, we're halfway through 2025 and we have very little direction of where this is ultimately going to land and when. So you're seeing the consumer pull back. And if that continues, if that number misses, and you also see inflation come in right around forecast, I don't think it's going to drop. But I think if it comes in right at forecast, or again, 0.1%, and you see retail sales on Thursday plummet, that is going to be a great recipe for the Fed to get very dovish, like they already have been. I'm going to talk about that as my third point, to continue that banter and put the pressure on themselves, and more particularly on Chairman Powell, to make that rate reduction. So my prediction on retail sales, I think it's going to miss more than forecast. I think that pressure is going to mount. And I think we are going to see a favorable outlook for rates this week based on those two things. The third thing I think we need to just look at is we do have several Fed members once again speaking this week. The banter has been leaning more towards a very dovish approach. And what that essentially means is they're more favorable towards rate cuts, even though inflation might be a little bit higher than what they want it to be, the 2% target. Their fear is that the economy is slipping a little bit, and that overrides that fear of inflation. They do not want to see the economy, because once it slips and you move towards that kind of sluggish, recessionish, that's even a word, more towards a recession environment, that becomes now a real problem for the Fed. Now they're playing catch up, and now you may have sticky inflation, and that could lead to stagflation, which is what they absolutely do not want at all. So it's going to be really interesting to see what their comments do. They continue to be dovish. How much pressure is being mounted on Powell? You got to remember, he's coming to the end of his tenure. He's had a good run. A lot of people are very favorable on Fed Chairman Powell, and I think the last thing he wants to do is do anything drastic as he's exiting, regardless of all the pressure. I think he wants to make sure he's making a wise decision, and should those numbers come in like I think this week, I think we're going to see that number jump from about 61% of a September rate cut all the way back up to about 80 to 90%. And yours truly has been calling for the first rate cut of the year to be September. So let's hope I'm right. All right. So that's the three things I think we should really keep a lookout for as we head into this week. And as far as Monday goes, I think you're going to see a lot of posturing. And I think you may even see rates creep up just ever so slightly, because people don't want to be burned with the data that's going to be released on Tuesday morning. Lastly, this is a newsletter that I do put out. What I'm talking about comes in newsletter form. It is emailed to you. Should you want to get on that email distribution, please don't hesitate to just send me a DM, send me a line, let me know that you would like to be added to that list, and I'd be more than happy to do it. Once again, my name is Kevin Weedmark, aka The Mortgage Mouth. I am a mortgage consultant with well over 20 years of experience in this space, from a real estate broker, mortgage consultant. I flip houses, I've built houses. So more than happy to have a great educated conversation on how to make and position yourself for the best financial decisions for you. All right, y'all, have a great week, and I'll be coming to you later today with an episode of the Daily Dose. Hit that subscription button. Take care.